Hello all, this is David Rodriguez, quantitative strategist for dailyfx.com, here to talk about the British pound and what we've seen overnight. So if you remember, last week the British pound was actually going to be one of our major focuses because the Bank of England was releasing its highly anticipated inflation report, which came out this morning, and sure enough the BOE didn't disappoint. What exactly did they say? Well, they say a lot of things, but one of the most important ones was, Governor Carney didn't make it clear, or made it somewhat clear, that interest rates would rise, not to pre-crisis levels. So we're not going to see, UK yields at 5.5%, almost 6% anytime soon. But at the same time, they didn't dispel, speculation that they would indeed need to rise, not immediately, but the effect was fairly obvious on the British pound. The obvious question now becomes, can it continue higher? And below I show a couple of charts which should be of some concern to bulls. The first is a simple one, just pure price and distance from the 200-day moving average. Well, the reason I plot that is fairly straightforward. It shows us how extended the trend is. The 200-day moving average is seen as a long-term barometer of whether you're in an up or down trend, but I use this indicator called the disparity index to give us a sense of, okay, well, how much have we rallied off of the medium-term benchmark? And indeed, we're near some pretty significant levels here as we near multi-year resistance. On the second chart, it shows what retail FX crowds are doing. So that's something I talk about constantly, and for good reason, because instead of asking a bunch of people, how do you feel about the British pound? I look at what they're holding in their accounts. It's all anonymous. I can't see what Jane Smith or John Doe are holding, but I can see that short interest and the net short position on the British pound is at its most extreme since a couple of key highs. So I say this all the time, and it's definitely true. Extremes are only clear in hindsight, and you have to be careful that you don't try and pick tops because you can get burnt quite easily. And, the story's not over. The British pound could take out multi-year highs, but price action is a little stretched here, especially as sentiment hits fairly big extremes. And at the same time, we're seeing a noteworthy decline in volatility prices, which means that many traders are not betting on or hedging against further British pound gains. So again, take a look at the full charts below. I also linked to my colleague Christopher Vecchio's report on the BOE this morning. Should give you much more clarity. Best of luck trading, and I'll talk to you soon.